Emily, where are you? I know you've been worried about key risks like China and market valuations. Are you convinced by the bounce today?
I'm not convinced by the bounce today. I think there's more volatility to come. I would say we're cautiously optimistic through the end of the year. But in the short term, I think there are increasing risks of stagflation. And I think some of the difficulties that China is facing in, with rolling blackouts, with the Evergrande issue, and just with the general level of debt in their economy is going to be a headwind. China is the second largest economy in the world. And over the last few years, they've contributed 30% to GDP. So that, I think, is a risk that the market may be underappreciating.
That's interesting, Emily, because a lot of people have kind of ignored the China risk. It was like a one-day effect. But you think this is something that could derail the markets here more broadly, but possibly the economy as well?
Well, I'm less concerned about contagion. That 2 or 3 day panic over Evergrande was this the next Lehman Brothers? Was there going to be contagion that would affect global financial markets? I think the issue is actually more, will this turn into a decline in real estate prices that would affect the Chinese middle class? So Evergrande, for example, has sold $1.4 million apartments that they've not yet built. The typical urban Chinese person has about 70% of their net worth in housing. So similar to the US in 2007, if we saw even a slight decline in land prices, that could be a problem for the Chinese economy that could reverberate across the globe. Now, I don't think, again, I'm cautiously optimistic going into the end of the year, but I think that's an underappreciated risk.
So you guys have a big wealth management business. What are you telling your clients to do about some of these risks and the coming market volatility that you see? Where should they go?
We're very long-term investors, and we have been having people rebalance portfolios rigorously, ensure that they're diversified. We do see opportunities in certain sectors, and for those who like to buy individual stocks, there's a certain subset of growth stocks that haven't really kept up with the frothy, the FANG stocks and the U.S. large cap and mid cap growth stocks. And so in both of those cases, with regard to the sector, we like semiconductors a lot. They're cyclicals. If you pick the right names, they actually pay dividends. And we expect the semiconductor revenue pool to double by 2030. And those prices have come down over the last month or so because investors have been very concerned about the global supply chain shortages, which is a real concern. And it's reverberating across the global economy. But if you're a patient long-term investor, this is a good opportunity to buy names like Taiwan Semiconductor, for example.